You seem to think this is going to get very bad. And I just want you to spell out why, because there is a degree of comfort that people have got that we're on a de-escalatory path.
Well, the comfort comes from the fact that the tankers only stopped arriving last week. You know, it's a 40-day process. And so almost immediately what we've seen is the inventory numbers have now started to get scary, and it's just starting. But you're not at the stage of just outright crisis pricing. You know, you're not at the stage where American, very low share of their income goes to gasoline, 3, 4, you know, it's 8, 9 in Germany. It's not that big a price. It's a sticker shock, but it's not really that huge an effect for the average American. Obviously, it's regressive and bad for poor people. So I think that the situation here gets worse simply because it's guaranteed. You know, normally when we're forecasting oil, we can be very, very wrong for extraneous reasons. In this case, we can be sure that the next 2 months is going to be an ongoing absolute disaster, even if you open the straits tomorrow, because it's just locked in by virtue of tankers. And the tankers are all in the wrong places. It probably means it's 3 months. So it's a very bad situation, and we're looking at where the supply chains are breaking. We've focused on Australia, on jet fuel. People are talking about solvents in Japan for chip making today. You know, you'll see where the cracks really start to appear. And then finally, there's another issue, which is emergency inventories. The first slug is easy to release. The second slug, you're going to release it, but you're going to be scared. And then there's a question of, can you really release the third slug? So the emergency inventories are probably lower in real, actual terms than they appear on your screen, and they appear very low.